Do you want a structure that can allow you to optimize for growing your property portfolio while minimizing your taxes and still protecting your asset base? Well, in this video, we're going to go through those key areas. Growing the property portfolio, minimizing your taxes, and creating structures that protect you and your family. So I'm going to be showing you my exact blueprint of how I structure my property portfolio, minimizing the risk and maximizing the upsides. Now, my name's Luke and I talk all things real estate, renovating, and financial freedom. If you could subscribe to the channel down below and drop a like on this video if you get any value out of it, it would be greatly appreciated. And if you're looking for a Brisbane buyer's agent, head over to purposeproperty.com.au. Now, without waiting any longer, let's take a look at my complete blueprint of how I structure and manage my property portfolio. Now, on screen, we have a layout of both business and property structuring. Now, I'm a chartered accountant by trade with CA Australia, and I'm also a buyer's agent. So I have plenty of experience both buying hundreds of properties for our clients and structuring my own personal property portfolio from a chartered accountant's point of view. So before we dive into the property structure specifically, I just want to give you a quick overview of a basic company structure. And so if you run your own business, whether you're a tradie, an accountant, a professional in whatever manner, this is the structure that I personally use, and a lot of people I know who run their own businesses use this type of structure. So, we've got the operating company, which is Purpose Property. And so then that is owned by a family trust. And above that family trust, we have a corporate trustee, and you would be the director of the corporate trustee. And this is also a PTY Ltd. So, you've got two companies and a trust in between. The reason you would set up this structure this way for the company is asset protection. So you're protected by the limited trading of the PTY Ltd. But then you're able to have flexibility in distribution of profits because the family trust essentially owns the company. And so this is exactly how I've set up my business. Now, lots of other business owners set up their operations directly through a trust. The only difference with setting up directly through a trust is you'll need to distribute all of the profits in each year if you run it that way. Whereas in my case, because I run my business through a company, I can have retained earnings and I could pay those out at a later date as essentially a franked dividend. And so if you run your own company, have a chat with your accountant, but this is the way I like to structure it. Operating company then would pay distributions to the family trust, and the controller of the family trust is a company. To have that separation and corporate trustee in place, and to give you flexibility of replacing the directors there in family circumstances where things change. And so that's a basic corporate structure. Now let's move to the more exciting stuff. Should I buy with a company and trust set up for my investments, or should I buy in personal names? Now, I personally bought in personal names first. And the reason is, in most states in Australia, you're going to get higher land tax thresholds buying in your personal names. And it's also going to be more simple when you deal with brokers and banks to run through your finances. So if you're just starting out, I would recommend buying in personal names. And so you can see here, you might have a Queensland investment, a principal place like I do in Queensland, and then let's say a New South Wales investment in your personal name. This would give you a land tax structure, essentially that you get a $600,000 land tax threshold in Queensland. Then in New South Wales, I believe from memory, it's around $900,000 to $1 million that you get a land tax threshold in your personal names. So each of these properties would have their own land tax threshold, and your principal place of residence is exempt from land tax. So that's very effective from that structuring. And also when buying these deals, when dealing with the banks, they're going to look at your income, they're going to look at your expenses, and they're going to calculate the properties that you currently own, and your servicing and financing is going to be very basic from a numbers point of view. Now, let's say you're wanting to get a little bit more advanced, or you're wanting to use second and third tier lenders to extend your borrowing capacity. You have to plan this out in advance. So if you know you want to build a property portfolio of say 4 houses, like we're going to show you in this example here, and you need to be very wary of your borrowing capacity before you get into the trust structures, so you don't limit yourself when you're looking to create these neutrally geared trust structure scenarios. So on screen here, you can see the buying structure for a corporate trustee trust situation for an investment property here in Australia. And I've bought several properties in this structure myself, and I know a lot of clients do as well. And this is also quite similar to how SMSFs work. There's a little bit of variation in SMSFs with bare trusts, but it's relatively similar. So the general buying structure in a trust would be you've got the property at the bottom. That's controlled by the family trustee in this situation. And then there's a different company, so different to company 1 over here, there's company 2 as your corporate trustee for the family B trust. Now, go check this with your accountant, but you can potentially set up multiple corporate trustees and trusts to buy different investment properties. But let's say that this investment property was in Queensland. But then you might want to buy a property in New South Wales, or you might want to buy a property in Victoria, for example. There's a lot of talk of the Melbourne market. So let's say we buy the other one in Victoria. Now you could have 2 properties under the one corporate trustee trust setup, and that makes sense because they're spread across different states. And so each state's going to have different land tax thresholds. So in that circumstance, in my opinion, it wouldn't make sense to set up another corporate trustee and trust. You can use this one corporate trustee and trust to buy one property in Queensland, one property in Victoria, and maybe one property in New South Wales. But if you're going to buy 2 properties in Queensland, you might want to think about setting up separate trustees and trusts because there's different land tax thresholds for each corporate trustee. So you could have company 2 and then copy all of that and have company 3, and then you'd have family trust C. And so that's a smart way, in my opinion, as an accountant and a buyer's agent to build out your trust structures and look to grow the property portfolio. And with second and third tier lenders, you can potentially get more borrowing capacity using this structured setup. So overall, summarizing this view here, I generally want to keep my company and business operations completely separate from the property portfolio. You're looking to build out in personal names, in my opinion, to begin with for simplicity, for easier borrowing, and generally getting higher land tax thresholds. And then you're looking to use corporate trustee and trust structures here, which aren't actually that complex. And so we're going to talk through the costs of these different structures and then some key takeaways that you should know if you're looking to continue to grow your property portfolio. So how much does all this cost? If I'm looking to use a company and a trust setup, you're generally looking at around $2,500 to $3,000 with your accountant to set these structures up. Then you're going to have to pay ASIC fees and annual returns. So you're looking at somewhere between $300 to $1,000 a year for fees in terms of managing this system. Now, that means you're paying, say, $3,000 up front and $1,000 a year. So if you own the property for 10 years, it costs you $10,000. So do your maths on the land tax benefits and see if you're buying in that corporate trust structure, whether that would be a benefit to you. And then also consider if it can extend your borrowing power and you're able to build a slightly bigger asset base, whether that's a huge difference as well for those small amount of fees. But also, don't be afraid of buying in personal names. There's not a huge case of litigation here in Australia. It is obviously a risk that everyone has to consider, but it's not like we're not like the USA where everyone hits each other with subpoenas and tries to sue each other. And so it's a risk you need to consider, but it's not as prevalent here in Australia. So buying in personal names to begin with is going to suit most people. And then once you're looking to get a little bit more advanced and you're looking, you've got 2 purchases left in your borrowing capacity, that might be the time you want to jump over into those more corporate trustee and trust structures to control future investments. Overall, I think when we're building out a property portfolio, I personally target capital growth first and then cash flow second in the consolidation phase. And so to grow a larger property portfolio, it generally makes sense to start with those capital growth properties in your personal names because you get those higher land tax thresholds, and the growth on those properties can then be recycled by harvesting equity. Once we've harvested that equity, we've bought a couple of assets, then we might look to buy some more cash flow assets at a cheaper price point and put them in those trust structures. The reason I buy the cheaper assets in the trust structure setup is I can add granny flats to those properties and they're going to have a slightly lower land value. So I'm holding my more expensive capital growth properties generally in personal names, getting the negative gearing benefits. And then I'm holding my cheaper properties with the granny flat potential or executing on those granny flats to make those structures more neutrally geared. and to hold properties with lower land value in those trust structures. That last 30 seconds is probably the pinnacle of why you structure these different ways. So give that a rewind if you want to hear that again. Now, everyone's circumstances are different. How I buy properties and personal names and trust structures is going to be different to how you set it up and how another person sets it up who talks in this property space. Everyone's going to have slightly different variations. And we all need to look at borrowing power and capacity as we go along, because that changes when you have a kid, when you change jobs, when you have higher expenses for periods of time, or you bought the family home. And so if you want to sit down with myself and build out a strategy and plan to help you buy a property here in Brisbane in the next 3 to 6 months, head over to purposeproperty.com.au and we can talk you through the local market, and I can give you my thoughts and opinions on strategies on where you sit right now and how we can help you achieve your goals and work to where you want to be. So head over to purposeproperty.com.au for that. And also, if you want to see exactly how Emily and I built a multi-million-dollar property portfolio, and we go into a high level of detail on structuring and extending your borrowing power and tips and strategies in the course, then head over to purposeproperty.com.au and click on course, where you can learn how to build a multi-million-dollar property portfolio. I think the course delivers great value, so if you're interested in that, make sure you go click on course and find that one there. So I hope you got massive value out of the structuring and detail we've covered in this video. Make sure you drop a like, subscribe to the channel, and give this video a click over here if you're interested on more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.